Sam here, and I'll be doing the free video for Friday, September 27th, 2024. So I just finished making the premium video for the folks in the central room, and there was 3 points that I think came out from that video that I'm going to share with you guys. Two of them are clearly bullish points, and then one of them has the potential to be very quickly bearish, but isn't necessarily in play yet. So let's start with the two bullish points, and then we'll finish off with the one potential kind of fly in the ointment. So the most aligned and largest squeeze on the most significant product that I see is right here on the QQQ weekly chart. You can see you have a 2-dot squeeze there on the weekly chart. Last time you had a weekly squeeze with some arrows, that gave you a nice big run, and you have another weekly squeeze with a couple of more arrows underneath it. So that all is generally a bullish signal. The scores are bullish as well, right? It's a 44 out of 50 and a 34 out of 50 on the daily. So pretty bullish, and then it's trying to hold. As long as it holds above 486, I think it's fine. If you start to get below like 486, 485, the signal does get sloppy and would be very much in question. And the reason being is these candles here, there's just no range here. So imagine how many folks are all going to have stops right around there, right? So it makes it very attractive when you have very tight ranges like this to have one big down candle. And that's my concern. But I can't act on it quite just yet because I don't have the signals for it. So at least as it sits now, the signal that is in front of us right now is this weekly squeeze with a buy thrust signal above support that should, in most cases, look to take this into 500. So kind of keep that signal in mind. And of course, also understand the implications, right? If the QQQ weekly signal, which we just looked at, is true, then what else is true? Well, that means that tech in general probably goes higher. And if tech in general goes higher, that generally means the market goes higher. So it has a lot of knock-on effects as well. The second signal, and this is again a bullish signal, is HYG. So we looked at this signal last time that I was with you. This was 2 weeks ago. And I said as long as it's holding above this magenta line on HYG, that the market has to be viewed as bullish. It has held above the magenta line and only gained ground. And even though TLT, which is bonds, has been going lower, this has been staying sideways. That's a really bullish sign in most cases. So bullish point 1 was the QQQ weekly squeeze with buy thrust. Bullish point number 2 is HYG, which is junk credit, which would be one of the first places to show weakness, in my opinion, if there was going to be some. Looks great. I do want to point out, as long as we're here, you are getting extreme there and here. And that could be a sign of early exhaustion. No trigger yet, but just in the interest of fairness, I have to say that. And so those are the two bullish points. Now let's go to the potentially bearish point. And I am expecting some level of turbulence in October, primarily based on this signal. Actually, it's just a matter of timing it. I'd like to see the market go higher first. I'd like to see kind of a blow off into middle October and then a crash at the end of October would be kind of perfect for me. But you see how the cloud here is red for weeks and weeks and weeks and months and months. And then the cloud actually flips green right here, and it's staying green. Also, on the daily chart, the cloud is green as well. This is on VIX Futures, VX, right? So this is a very notable thing for me. When a cloud goes from red to green after multi-years of being red, it's something that stands out. The daily cloud also has done the same thing. And underneath that, you actually have a nice little squeeze that's developing there. So can this squeeze be a precursor to a quick pop higher and then a dip after that? Potentially. But it does at least introduce some level of caution and says, okay, bears, this is a weapon the bears could use going into next week. Despite the fact that everything looks great and everyone loves the market and everyone's super long, this could be a weapon the bears use going into next week. This is a formidable little setup here, and from this you can actually get a large green upward candle. So something to keep an eye on as well, and also understand the implications. If this chart actually does that, then the market's going to have a very swift sell-off. So just something to be aware of. So just wanted to share those 3 points with you guys. Aside from that, I think those 3 points kind of encapsulate everything. If you understand what we talked about with the bullish points, if you understand what we're talking about with the VIX, you can put those 2 ideas together, 3 ideas together, and kind of understand the totality of the market, in my opinion. So stay nimble going into next week. Understand that Monday's the end of the quarter, and then October could be a little bit more spicy than I think a lot of folks are anticipating. So stay nimble. Understand your signals, know your risk, and leave us a comment and a like before you go somewhere else on the YouTube. All right, guys. Catch you next Friday. Cheers.
Hey traders, this is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.